Now, when you look at the kind of loan programs, again, two big buckets. One is what we call government loans, and that's FHA or VA. Are any of you veterans? Won't spend a lot of time on VA then. But FHA is an excellent form of financing for first-time home buyers. And conventional financing, they're broken up into two areas. Let's look at FHA first. There are regular FHA loans, both adjustable, meaning fixed for a period of time, or 30-year fixed. There's a special loan called a 203K loan. Sherry, who was here a moment ago, is an expert in that area. And 203K loans are rehab loans. So you buy a house that needs to be fixed up, and you can actually finance the cost to fix it up and the purchase all at the same time in one loan. That's kind of cool. VA is a no-down program for a veteran, and there are all these guidelines about how much you had to have served, et cetera, but I won't get into the details of that today. The fixed period or hybrid ARMs are very popular right now, and here's why. A 30-year fixed rate loan is running high 4% rates, let's say 4 7/8 for a 30-year fixed. These loans could be as low as 3 7/8 fixed for the next 7 years. So if you said to your loan officer, I don't think I'm going to be here much more than 5 years or 7 years, I'm going to probably sell it or refinance it or do something different, we'd probably say to you, hey, have you thought about this 7-year loan? Because you're going to save quite a bit in interest over the period of that loan. It's going to be a big deal. So what we're going to do is we're going to talk to you about what's the best loan to fit your needs. FHA is awesome because of something we call gift funds. Many first-time homebuyers don't have the money for a down payment. So FHA is very liberal about getting gift money. You can get all the money for the down payment from parents. They have to be a blood relative, parents or blood relative for an FHA purchase, owner-occupied. The next big deal about FHA is that it requires a very low down payment. FHA only requires 3.5% as a down payment. And the loan currently will go to $729,750. So in other words, you could buy about a $750,000 house with 3.5% down at 4 7/8%. I mean, that's crazy. That's a really good deal. Lastly, FHA allows for something we call non-occupying co-borrowers. This is kind of a bank term, but the example here would be you guys are really close to qualifying, but you don't have quite enough income, so your parents co-borrow with you, or your brother or someone who has external income that can be used to help kind of put all that income together to help you to qualify. So pretty liberal qualifying there, and allows for very high debt ratios. So we like FHA a lot as a qualifying tool. Remember the small down payment, 3.5%. If you're on the conventional side and you're making a small down payment, those things vary with the type of property you're buying. If you're buying a condominium, we require 10% down. So you're going to see that a much larger requirement for down payment on conventional financing. The second thing is, just like FHA, there are fixed period ARMs, 5 years, 7 years, 10 years, where the loan is fixed for that period of time. Those interest rates are lower than a 30-year fix, so they're a little easier to qualify for as well. The conventional loans like FHA have a 15 or a 30-year amortization. We've never seen a 15-year FHA loan because people making a small down payment and buying for the first time rarely buy with a real high payment like that. But with conventional financing, we see it all the time. We have people coming to us and say, could I have a 10-year loan? Which means that your payments after 120 months, that house is paid off. You can imagine how big the payment is, but it's paid off. In conventional financing, there are 3 kinds of loans. One is called a conforming loan. That's a loan from $0 to $417,000. You don't have to remember all these things. I'm just kind of sharing it with you. The reason that it uses the term conforming is that those loans are sold to an agency called Fannie Mae, at least currently until the government gets out of the business. And Fannie Mae buys these loans based upon their conforming to the Fannie Mae guidelines. It's this big book, it's about that thick, and everything must fit those guidelines. If it does, Fannie Mae agrees to buy it from us, okay? Still within conforming is a new category called high balance. That's between $417,000 and $729,750. Still a conforming loan, but with some additional tougher guidelines involved, okay? Because it's lending more money. Now, effective September 30, if any of you were in the market for a home that had that up in that 729 range, that is dropping back to 625, okay? And that's happening on September 30th. And we don't think it'll be renewed. So if you're in that price range, you want to get out there and get a home real quick, because that conforming loan limit's dropping back down to 625. 625, 500, I think, if I remember correctly. The last category of loans called a jumbo loan. Jumbo loans over 729, 750, up to, $5 million, whatever the case may be. Rules there are completely different. The loan is not sold to Fannie Mae or Freddie Mac. The question was, are there advantages to a conventional loan, a non-government loan, over FHA? And the answer is kind of yes. If you are putting 10% down and can therefore qualify or make an FH or a conventional loan work, we're going to probably, if you can easily qualify, we're going to probably recommend the conventional loan because there's a little less mortgage insurance involved overall. FHA has two kinds of mortgage insurance, one that is financed on top of the loan and one that's paid monthly. Conventional just has monthly. Okay, so it might be a little bit more expensive, but the rates are a little bit better FHA. So what we generally do is we'll sit down with you and we'll look at all the factors involved and we'll let you make the decision, or we'll help you to make it to see which one's better for you, because to us, we just want to get you in your home.